Hi, everyone. Welcome to the Capital Raiser Show, Season 5, powered by the Family Office Club. I'm your new host, Weston Walker, and we interview only the best investment managers and entrepreneurs. Shout out to our sponsors, the Family Office Club, Capitalist Pro, and Invest Next. Today we have Richard Wilson, founder and CEO of the Family Office Club. He's hosted over 300 in-person events in the family office industry. Richard, welcome to the show.
Thanks for having me here, Weston. Appreciate it.
For sure. Yeah, and Richard is actually
Richard,
a partner in the show. This is kind of a subsidiary of what he does, and I'm the new host, which I have the privilege of being. And Richard, why don't you tell us briefly what the Family Office Club is?
sure. We're a investor club that has a full spectrum in terms of sizes and types of investors. So we have everything from dentists and doctors and pro athletes from the NFL and NBA who are making $1 or $2 million a year. We have little angel investors that are accredited, but we also have private investors, ultra wealthy investors, wealth advisors, family offices, centimillionaires, some billionaires. And so at our investor club, you'll meet capital partners, meet peers. We talk about peak performance mindsets. We talk about structuring deals with proprietary investment structures and try to keep it very fast moving. So, like at our last event, we had 750 people there, and we had 125 speakers on stage over 3 days. And those are our big investor summit type formats. And then we also do about a dozen little investor masterminds with maybe 50 to 100 people in the room per year as well. So we're all about meeting in person, learning from each other, kind of growing as a community.
Got it. Yeah, so we usually have operators and people that are raising capital on the show. You're on the other
Right.
side of the table working with investors. Where are you seeing investors like the Family Office Club put their money?
Sure. Pretty broad spectrum. What I find is that investors in this market and in general, but especially in this market, like credit. They like things where you're getting almost an equity-like return with the security of debt behind it. They like things that are from an industry they can understand or that they made their money in. So if somebody made their money in manufacturing and someone brings them a manufacturing deal, they're going to be able to conduct faster due diligence and invest with more conviction, maybe even play as an advisory board member and help play offense and defense for that investment that just went into that company. So that's always a shortcut way to getting deals done, see where they made their money, and then go to those investors first who know it cold. Investors like things local to them. Even if you spent your whole life investing in self-storage and somebody brings you a self-storage deal in Nigeria or Egypt or Russia, if you're based in San Diego, you're probably not going to do that deal. So if you are local to an investor or the deal is local to an investor, again, they're much more likely to invest. And then people just want to see a track record of success, some sort of de-risking, something that makes them very high conviction that this is going to be an excellent use of their time to even look into the investment in the first place.
Got it. And yeah, we've interviewed mostly real estate operators on the show, a couple private equity guys.
Sure.
Um, where are you seeing investors in real estate putting their money? Which asset classes, which markets, etc.?
Sure. I would say that right now, the types of deals would be like rescue capital deals where somebody needs to be recapped because it's got floating rate debt. That type of a situation, we just had one of those come in this morning on a 400 unit multifamily property where it's a motivated seller. So that type of a deal comes up often. In terms of asset classes, though, it's interesting. Self storage is coming up more often than it was just 2, 3 years ago. But multifamily always comes up a lot. There's just so many multifamily properties out there. There's tons of opportunities. There's tons of demand in the space. A lot of investors feel like they may have a decent set of multifamily relationships out there with sponsors, though. And so I do think it's a little bit of an advantage if you're in an area such as data centers or RV park, mobile home parks, and you have a good track record already in that space, et cetera, just because it's something different. And anytime you're raising capital, if you offer things that somebody has heard many times before, there's just more competition, right? So I think if the foundational metrics on a real estate deal are good and it doesn't sound like everybody else, then it makes investors lean forward.
Hmm. Yeah, and you mentioned it doesn't sound like everyone else. How can you make your investment pitch unique as a real estate investment firm? Because a lot of multifamily guys sound exactly the same.
Yeah, exactly, exactly. So super important. The more competitive the niche, the more you typically need to laser focus on a strategy that others are not using, or focus on an investor demographic and be so dialed into them that you get great access to capital there, or figure out a geography where you can just be so laser focused on, Boise, Idaho, that anyone else who's in that market is often also investing in other markets, but you're laser focused in Boise, and really it's these four neighborhoods or three zip codes, and you make a database of every single asset and look up the county records, who owns every asset, and take them all out for lunch or a cup of coffee or breakfast once a year, et cetera. And just go that extra mile that people can't go when they're spread out across all these different cities or when they're not based in Boise, et cetera. So whether it's your strategy, your geographical location, or an investor demographic, those are some of the three ways that you can really stand out and be more effective than others in a really crowded niche.
Got it. And when raising capital, how do you think the pitch should look when they're approaching a family office?
As concise and compelling as possible. And most people get neither of those things right. Like you said, running this podcast, most of the multifamily groups out there all sound the same, right? They're buying assets and putting, 10K or 20K a door, raising rents because they were owned by a mom and pop that hadn't raised the rents for a long time, and then trying to produce a good returns for the investors. So having something in a single sentence that gets people to lean forward is really critical. Most of the time I ask people what they do and they take, a long paragraph to explain, or they send an email out and it's a long essay that nobody will read. You have to be able to say in just a few seconds on a voicemail, or the first line or line and a half in an email, you have to be able to say what makes you super unique. So first is be really concise. Every word matters. And then next is what makes you different than the other emails coming in. We have a tool called Email Meter, and we use it for our whole team. And we use the Google Suite, like workplace platform for our business. And just with my email address, I get 808 emails a day on average. And I'm sure there's family offices out there that get more emails than I do. And so if you think about that, I only get, even on a busy day of phone calls coming in, I probably only get 8 or 10 voicemails in a day maximum, but I get 800 emails. So if you're sending an email to someone, you're competing against 800 other people. And I'm a fast typer and I might send 30 to 70 emails in a day. But I would bet a lot of family offices, especially the wealthier ones, are in a demographic where they're 5, 10, 20 years older than me. They're not sending 70 emails in a day. They're sending 10 to 40 maybe, right? And so what you have to think is that there's massive competition out there. And if you don't really be aware of how what you're saying is different or exactly the same as what everyone else is, then you're going to be dead in the water and not get any results.
Yeah, so you said you get fewer phone calls. Do you think investors should call on the phone?
Oh yeah,
Or
I think
sorry,
that
capital raisers?
yeah, definitely capital raisers should be using the phone a lot more. My phone number is on my LinkedIn account. It's at the top of our websites. I tell people to text me in my LinkedIn newsletter that goes out to 50,000 people. And even though I do all that stuff, I'm only getting, 8 voicemails in a day on a busy day. So the point is that I get 100 times more emails than I do phone calls. So it's a way to stand out. And if your one liner is dialed in, I listen to every voicemail because there's only 8 of them at most. I don't read every single email out of 800, right? There's no way to do that. I try to clear them out based on subject lines, based on what looks like spam or promotional or a newsletter of some type. The other thing to keep in mind for capital raisers out there is that Robert Cialdini is the godfather of influence and persuasion, and he has shown it's scientifically proven that if you're trying to sell somebody anything, it could be a Dyson vacuum or a Rolex watch or a car, meeting in person is 16 times more effective than if you did so over a Zoom or over a phone call. So meeting in person is super critical. So even though our Investor Club has 17 million, like just under 17 million social media followers and group members right now, we're still hosting in-person events, every month on average, because we know that meeting in person is how deals get done. If you're asking someone to invest more than $1,000 or 10,000 or 25 or 100,000, they're going to want to meet you in person, and it speeds up the moving up the trust curve with them.
Sure. Yeah, and you mentioned the subject line when you were searching through your emails. What do you look for, and what is a subject line example that stands out to you?
Um, Part of it is the type of subject line. If it just sounds like a informational newsletter and I'm really busy, then I may skip it. If it doesn't sound unique from all the other subject lines, then I'll skip it. Something that would be interesting would be something that would serve me versus trying to sell me. So if somebody sends me something and it's like, oh, SEO for your website, or let me optimize your podcast, or whatever, then I ignore that, right away because we get so many of those types of spam messages. And I think a lot of people raising capital don't understand that you need to build a relationship above all else, and nobody owes you a response to your pitch. And if they don't know you, you could have the most well dialed in pitch in the world, and only a percentage will reply because there's no context of trust around it. And so, doing something for them first, helping them first, giving them a free resource. Like today, we emailed out a blast from a billionaire we had on stage at our last event, and it was like a 16-minute billionaire fireside chat. So we emailed that out to people, and we said, "Oh, and by the way, if you want to come to our Investor Club events, here's how membership works." And so that was an example of us trying to break through all the clutter in somebody's inbox because we said, here's 16 minutes straight from a billionaire you could stream for free. And another example is we developed a due diligence artificial intelligence tool called Dewey. And it's a basically a due diligence advisor on tap. Anytime you get a pitch deck or a deal, it will instantly digest it and in 3 to 5 seconds tell you what some of the top risks are, questions you should ask up front, et cetera. And we're offering that free tool to people who come to our artificial intelligence mastermind or get involved with our investor club. And that's something that like investors want. And now there's some context of trust because of that tool or because of the billionaire fireside chat. And those are just practical examples because sometimes people say, oh, well, the way I help people is I invest their money in self storage. It's like, no, that's what you sell to people. I know you think it's helpful, but so does everyone running an investment fund on planet Earth. So it's not really looking extra helpful in somebody's inbox to sell them your self storage fund, you know?
Sure. Yeah, talk about building a social following. You have a very large social following, especially on LinkedIn.
Right.
Talk about how capital raisers, operators, people raising funds can use or leverage the social platforms to gain investors.
Sure. Well, there's a couple parts to it. One is when you get to a certain size of bulk or heft, then it will help get you onto podcasts and stages and get you exposure. But you want to balance that with having followers that will actually do business with you, of course, right? So we look at it over the short and long term, meaning that out of our 17 million followers and group members, probably 3 million of those are in Asia, where we plan to be hosting more events in the future. And those don't help us a lot right now. Not many of them come to the United States, but we think it will in the future. And it helps with like the bulk size of the almost 17 million that are following our work. It spreads word of mouth through the industry. But what we try to do is put out content every day on YouTube and LinkedIn primarily. And we try to create helpful resources that are evergreen. So we don't talk about what Trump said today about Greenland or like some investment strategy related to interest rates that may change tomorrow. It's like no one's going to care about that 2 years from now. They're like, oh, we already know what happened with Greenland. Or like, oh, we already know what happened with interest rates, and they changed 19 more times since he recorded that worthless video, right? It doesn't really help anyone. So you want to create evergreen blocks of content because then you can stack them up on each other and we can point people to our YouTube channel and say, we have 1,100 videos on our Centimillionaire Strategies YouTube channel. And we always want to be helping people for free before we're asking them to spend money on joining our investor club, because then they already made money off of our ideas before they spend a dollar with us. And it's the same when you go to an investor. You want them to feel like they are already gained from the relationship with you and they value you. So they want to keep in touch and they want to tap into your expertise within whatever niche you're investing in.
So you mentioned content as a way to provide value. Are there any other tools or ways that operators, capital raisers can provide value?
Sure. Yeah, it could be. They could add value through a referral of a client, of a partner. We had a $1 billion plus wealth advisor who spoke at our last event, and he met somebody at one of our other events based in Salt Lake City who managed over $100 million in wealth management, and he was able to recruit him to their platform. And now he's opening up an office for them in Salt Lake City under his $1 billion+ brand to help scale him faster, leveraging their back office and their team. Sourcing a deal for somebody, helping someone get an internship or employment or get into a school for a son or daughter, inviting a spouse or a son or daughter for next gen type training at a conference or something. Like all those types of things are like real world relationship building, but it's going to depend on your expertise, right? If you're amazing at sourcing deals and someone tells you like, no, we don't invest in funds, we do our own deals here at our family office. Well, you can still keep in touch and say, well, if I source a deal and we invest some of the capital, would you be open to a co-GP or a joint venture relationship? Or if we turn down a deal that we thought was amazing and we wish we could do it, but it's in Texas, it's not in Florida, can we send that deal to you? And then maybe that's just a way for us to keep in touch and we'll just figure out what works deal term wise, if that scenario comes up at that time. And then those are all ways you can add value and keep in touch with somebody and just kind of think open-minded. The people who raise the least amount of capital are the ones who went to some event where they told you you have to launch a fund, your solution to life is having a fund, and they go down that road with that road with blinders on to every other possibility of working with investors, and they go to investors and say, I have a fund, here's the minimum, and they pitch that, and they're not willing to work with someone on direct deals, not willing to work in a creative way. That's just going to kill most of your progress in the family office space if you have a closed mind like that.
Yeah, the most successful salespeople and capital raisers I've met, I mean, they don't really pitch at all. It's all
Right,
providing value, and
right,
follow up politely as well, and
yeah,
not just, hey, are you available? Are you available? It's
right,
constantly over a long period of time providing value to people.
right.
Um, we talked about the one liner, and you also mentioned in our last episode with you the one pager. Can you describe briefly what you would have on the one pager after
Sure.
you give them the shorter pitch?
Sure, sure. Yeah, I think that most people I see pitching things, like 99% of your competition, if you're raising capital right now, they do not have a one-liner, they don't have a one-pager, and they don't have a 1 to 3 minute video from the founder saying exactly what you do and articulating it well in a very concise 1 to 3 minute video. And the one-pager is basically, if you have a pitch deck, you just look at what are the top three most powerful visuals, what are the top 2 to 4 reasons why people invest with you, what are the top 2 to 4 reasons why someone may not invest with you? Do you have a really credible team? Do you have a really credible track record? And then looking at those elements and saying, okay, on this one pager, you usually have your brand at the top, your one liner at the top, your contact details, the top couple of visuals, kill off a couple of the objections of why someone may not invest with you and just cut them off at the pass on addressing those up front. Maybe mention the reason why 100 other investors already trust you with $30 million or whatever it is. And then display your team at the bottom so they know who they'd be working with and embed your founder video articulating your strategy. So when they look at the one pager, they could click on that founder video. We've had thousands of investors speak at our events and attend our events, and most of them would tell you they would rather see a one-liner, a one-pager, and a founder video, or just the founder video, rather than a 44-page pitch deck that they're not going to have time to read every page of. So
Totally.
pretty important to have those
And that's
things.
what that's where people can stand out because you have 800 emails you're looking at, and probably 50% are pitch decks from people that are
Right,
trying to raise money.
right, or really long
And
emails. Yeah.
totally. So yeah, one last question: where can people find out more about you, and how can they reach out?
Sure. They can find out more at our website, familyoffices.com. You can see our event schedule coming up. Underneath team at the top, you can look at the frequently asked questions. I've been doing this for 18 years and we've gotten the same 5 questions over 1,000 times. So check that out if you want to learn more about our investor club. We also have under become a member, several membership options as well as different solutions on how we can help you raise capital. And if you're feeling like this is the first time you've heard of our investor club and you're not quite sure if it is for you, one thing to keep in mind is that it's not only family offices. You're not going to only be pitching 100 million and billion-dollar plus people. If you're at our events, you'll meet normal investors that are accredited investors. It will not be overly intimidating. It's a pretty welcoming community. And the other thing is that you can de-risk the whole relationship transaction. If you go to YouTube and go to Centimillionaire Strategies, you'll see our 1,100 videos there. And you'll see that the talks on stage are pretty inspiring and exciting. Seeing the mindset of a centimillionaire, getting advice on fireside chats from billionaires, and then hearing from NFL and NBA athletes on what it took mindset wise to get to that level, and then hearing from dozens and dozens of investors on stage just kind of changes your brain on what's possible, grows your capital network. It just kind of pushes you to be a better person. And we always kind of stress in our community that it's important to be ultra healthy and ultra wealthy, not just focus on money, and that the class act individual is who wins in the family office space. And so that's important for us to have a healthy community and an enjoyable community to be part of. And but yeah, just go to familyoffices.com and or shoot me a text message. It's just 305-333-1155.
Perfect. Well, Richard, thank you for coming on. Again, shout out to our sponsors, the Family Office Club, which Richard is the founder of, Capitalist Pro, and Invest Next. Richard, thank you.
Cool. Thank you, Weston. Take care.
Bye.